Barrera with the Investing News Network, and here with me today is Chris Berry of House Mountain Partners. Chris, thank you so much for joining us today.
Thanks for having me.
All right, so we're at day 2 of PDAC. How are you finding the conference? Are investors interested in the battery metal sector?
Very much so, and that's been a consistent theme for the last couple of years. I feel like the whole mining sector in general is just sort of emerging from its funk from the last couple of years, but it's clearly that energy metals or battery metals have really kind of led the charge.
All right, so...
No pun intended.
Let's talk about lithium.
Okay.
There have been so many news since the start of the year. It's sort of hard to know where to start and ask you a question, but let's begin with the SQM Corfo deal.
Sure.
Can you explain a little bit to investors that maybe are new to the sector why this deal was so important for the market?
Well, it's important because SQM is the largest lithium producer in the world, and they're limited essentially based on the amount they can produce based on the agreement that they had with Corfo. And for your listeners who don't know, Corfo is essentially the state economic development agency in Chile. So the negotiation between SQM and Corfo had dragged on for a long time. We could probably sit here for half an hour and dissect it, but we won't. But nevertheless, they came to an agreement, and obviously that's caused a lot of volatility or uncertainty in the market. But nevertheless, the fact that an agreement is now in place for SQM out to 2027 or 2030 is on a net basis positive for lithium overall.
Okay, that's great. And another news that's been impacting the market is the recent report released by Morgan Stanley, which is predicting a decline of prices by 2021.
Yeah.
Do you agree with their forecast? And if you don't, where do you see prices going in the next couple of years?
I don't agree with the forecast because if prices fell to the levels that they were predicting, much of the cost curve, the hard rock portion of the cost curve, would not be economic. And so you have this really, I think, strong and defensible demand dynamic in lithium. But if prices were to fall to, I think, $7,200 a ton, whatever they were talking about, most of that hard rock that's forecast to come on stream between now and 2021 wouldn't come on stream. So I do see lithium prices falling, probably to $11,000 to $12,000 a ton, probably by that time frame, maybe a little bit further beyond that, but in no way do I see prices falling to that level that they mentioned in the report.
Right, and their report also mentions that the market might be oversupplied. Should investors be worried about an oversupply in the lithium market?
I think, just like anything else in life, it's all about probabilities, and I think what you want to think about in lithium in terms of oversupply is what would have to happen for an oversupply thesis to come true. So essentially, every project, both brine and hard rock, would have to come on stream on time and produce at capacity. All of the conversion capacity that's either existing today or coming on stream would have to be up and running. And what is the likelihood of both of those happening on time and on budget? It's very low. And then thirdly, I think for an oversupply argument to come true, you'd have to have electric vehicles in terms of demand just not materialize. And so when you think about those three things in terms of probabilities, they're very low. I wouldn't say the probability is zero, but it's almost minuscule.
All right, and just before that report was released, you actually published an article about lithium volatility. So is lithium volatility a curse or a gift?
I think it's a gift, depending upon how long you've been investing in the space. If you just got in, and the reason why I think that there's been a great deal of volatility in lithium comes from misunderstanding around the agreement with SQM and Corfo. That obviously shook the market, and then of course compounded by this Morgan Stanley report as well. Look, I think if you have a 3 to 5 to 7 year bullish view on lithium, what's happening in the space right now is a gift.
All right, that's great. So let's jump to another battery metal, Cobalt.
Sure.
Of course. So we know there have been a lot of talks about long-term contracts to secure supply from car makers and even Apple to secure supply for their smartphones. So why are these long-term deals important for the market, and why should investors care about them?
Well, they're important for end users because whether or not you're an OEM or you're Apple, you want to have visibility on your supply chain out to 2025, 2027, 2030. And what I think is interesting in the case of Apple or Samsung or the electronics manufacturers is they, along with the OEMs, believe that vehicle electrification is real and it's going to happen. We can argue about penetration rates out over the next 5 to 10 years, but the electronics manufacturers are worried about getting crowded out. And so that's why they, along with their downstream, or upstream, I should say, partners, are trying to lock in these longer term deals on the cobalt side. So it's very important for security of supply.
All right, so do you have a particular date when you expect these actual contracts to be signed or closed?
Well, I would have think that some of them would have been closed already. I mean, there's lots of talk of negotiation going on in the markets, and I think the issue is, what is the long-term price that a buyer is willing to pay? And also, what is the length, the duration of a contract? I mean, most contracts that I've seen, whether or not it's lithium or cobalt, aren't 10 years in duration. I mean, that's a lifetime with these niche metals. And so it's all about the amount, it's all about the price, and it's all about, again, I guess your sort of view of the future around electric vehicles.
All right, and another news in this particular metal was about the DRC, where most of the cobalt is mined, that they might be hiking their taxes and royalties for cobalt and other metals.
Yep.
How do you expect that to impact the market?
Well, I think I don't believe that law has been signed yet by the government in the DRC, so it's still being negotiated. Look, it's going to raise the cost of doing business in the country, but I actually think out over the next few years, the amount of cobalt coming from the DRC is going to increase as opposed to decrease. My sense is that near-term projects in safer, more reliable geopolitical jurisdictions aren't going to be ready for the next few years. They have to get financed, you have to get approved by end users, so it's going to take a long time to see, excessive amounts of cobalt coming from Australia or Canada. They probably will in the future, but right now the DRC is still, for better or worse, the place to be.
All right, so we have a lot of investors watching us today that might be new to the space. What is your best piece of advice for them in the battery metal sector,
look,
right?
I mean, we're in the middle of this incredible structural shift around mobility and around energy storage, and I think that is a 10 to 15 year move, what we're sort of seeing. When you think about renewable energy prices falling, electric vehicles becoming more ubiquitous, and within that, you've got these metals cycles. I still think that cobalt and lithium, prices will go up, prices will fall. Those are still cyclical metals, despite the fact that you're seeing this really incredible structural change in terms of the backdrop. When you're looking at these companies, whether or not it's a producer, a near-term producer, or an exploration play, you want to find projects that are scalable, so large and long-lived, and even probably more important than that, you want to find management teams that have the technical capability to bring a lithium or bring a cobalt project into play. Okay, cost of production does matter. You want to be on the low end of the cost curve, but at the end of the day, if you cannot produce a battery grade or highly pure material from a given deposit, it doesn't matter what the cost is.
Exactly. So what factors should investors watch in the rest of the year? Like, we're approaching the second quarter, what factors are going to impact the battery metal sector?
Sure. Well, on the lithium side, I think the big news right now is that FMC, one of the larger producers of lithium, is going to be IPOing their business. And so I think that's important because it'll give the market an idea of what a pure play, a lithium pure play producer is valued at. They're talking about raising $500 million. But whatever the market cap or whatever the valuation is for that project will be very important, and I think that could potentially reset both up and reset down valuations in the lithium space right now. So that's probably one of the top things I would be looking at. The other thing I'd be looking at is the success or the challenges that might come from a lot of the hard rock production in Australia. There's been a lot of money pumped into that part of the world, and now it's time for them to start showing that they can actually build these projects and produce at scale.
All right. And finally, my last question for you is about a different battery metal, vanadium. What are your thoughts on that metal, and how is that story different from cobalt or lithium? Well,
vanadium is really a steel story, and so when I think about vanadium or I look at vanadium, I try and get a sense for what's going on in the steel market globally. Look, it's no secret, I think, the success or failure of vanadium as an additive to steel, and also in the battery business, it's going to be driven by China. So right now, with respect to vanadium, I'm just trying to do as much research as I can around battery technology, and because there are, pros and cons to a vanadium redox battery relative to lithium ion, but my sense is that vanadium's had an incredible run just in terms of the pentoxide price over the last few months. I do probably expect that to continue for the next little while, but again, it's all dependent on China and sort of what they do with respect to steel production and also adoption of VRBs.
All right, thank you so much for joining us today.
Thank you.
All right. Once again, I'm Priscilla Barrera with the Investing News Network, and here was Chris Berry of House Mountain Partners.